Hey gang, earnings are here, and earnings equal volatility. Now, everyone knows you can't trade volatile market with tight stop losses. That's why in today's video, I'm going to introduce the natural hedge. It's very important and it'll help you take advantage of the current market cycle. Now, before I let you go, don't forget to sign up for my live class. I'm doing a live class. All the details are below this video. It'll teach you advanced professional hedge fund tactics that you need to know right now in this market. Sign up now. All right, we're back in the lab, and you're probably thinking to yourself, what is this natural hedge business? I've never heard of a natural hedge. Well, let me show you a little exercise and you'll understand exactly where I'm coming from. This is the stock market. As you can see, from November till about a few days ago, it's been going primarily down. There's no other way to say it. The stock market's been going down. It's a very clear directional bias to the downside. Now, look at this chart. It's moving in a completely opposite direction. This ticker symbol is TLT. It's the long-term treasury bond ETF. This follows the 10-year and the 30-year treasury bond futures, okay? And typically, when stocks go down, bonds go up. So that's right, adding the long bond to your portfolio can drastically decrease risk. And I'm going to show you a few more examples. But before I do, I want you to keep in mind, this short tutorial is just the beginning of what you'll see in my live class that's scheduled for January 22nd. I'm going to take off the gloves and I'm going to go deep into position clusters using bonds as a hedge. I'm also going to give you the best sector and the best stock to trade for 2019. So don't miss out. Sign up below this video. So let's continue now. Let me show you some examples. So in this example, you can see a position cluster. A position cluster is when we create a position based on a few different ticker symbols. And what we usually do is include a bond. In this example, we have 20% in the long bond, as you could see here. And it offset the risk on the trade substantially. And I mean substantially, okay? It turned a losing position cluster. This is a 2-week position cluster. We don't hold it for any more than that. And it saved the day. It turned a loss, a fairly good sized loss, into a profit of $11,178.82 just by including a bond ETF in our position cluster. So as you can see, adding a long bond can have huge benefits to your account. It can lower your portfolio volatility. It can lower your portfolio risk because when volatility is lower, risk is lower. It can increase your percentage of winning trades. And most importantly, it can increase your profit factor. And that's huge. So there's substantial benefits to adding the long bond to your portfolio. Gang, here's the bottom line. You need to make sure you understand the strategy now, because the trade entry of the year is about to drop into your lap, and we need to act fast. Right now, we're gearing up for the greatest market-wide buy signal since at least 2008, and here's how we'll prepare for it. On January 22nd, I'm going live with a very actionable briefing. In it, I'll share all the facts behind what should be a legendary trade entry, and show you exactly how to use natural hedging to play it. Use the link below to register now for this special live briefing. If you lost money in 18, this is your shot to win it all back and a whole lot more. I'll see you there.